Good morning, everyone. This is Mortgage Pros 411. I'm Audrey Boyce-No with Kevin Casey, and today we are joined by George Ramirez. And George, we didn't change your title, gosh darn it. So he's with Arc Home. I wrote Arc Mortgage like a ding dong, although they do mortgages, so there
We
is that.
do.
So
Good morning.
that's something.
Thanks for having me. I appreciate it.
Oh, it's our pleasure. We're really happy. Non-QM is really, in my opinion, like if you're not embracing it, somebody needs to put you in a chair and have a little talking to with you because it is so important right now. And I think it's just gaining momentum is becoming more and more important. So we're going to talk about that today. In the meantime, we have a few things happening this week. Go figure. Tomorrow we have the delayed, but now it's coming, BLS jobs report. As you might recall, last week we're in a mini, hopefully temporary government shutdown, and it did last for just a couple of days. So we are back to normal, and so we will have that report tomorrow. So it's interesting because they're forecasting 70,000 new jobs. And just based on the previous jobs report we've had recently that have been abysmal, to put it mildly, like ADP's weekly employment report came in and they showed an average of 6,500 jobs per week for the 4 weeks ending January 24th. And that is 26,000 jobs a month. Their jobs report last week was terrible. Their previous report, they started doing this weekly thing during the government shutdown in the fall. So that was revised down. So it is going to be interesting to see what BLS comes up with. They're also changing their calculation for the birth death model, which has been, quite frankly, the bane of our existence. And I think probably
Wait. The birth death model is the bane of our existence. I
yeah,
mean, the births is okay. The death would be the bane.
they're miscalculations of the birth death model.
Oh, okay. Got it.
Anything
Got it. I
new
just want to
and
make sure we got
dragging
that clear.
businesses, that has been the bane of our existence. So they're going to revise it. I mean, to what? Who knows? Is it going to be better? Is it going to be worse? We are
Well,
not going to
well,
know.
it
Nobody
can't be any
knows.
worse than China's reevaluation of their population from
That's true.
1.5 billion to like 5 billion something. Or yes,
Wait, you went the wrong way.
500 billion?
I know they went down like by
You went
almost a
down.
billion people.
Yeah, yeah, they were apparently it was not good for people's health to give the real numbers, and so they kept inflating them. And then finally somehow somebody came out, and this was a couple years ago with the real numbers, and not good at all. So, okay, moving right along. On Thursday, we're gonna have existing home sales, and on Friday, we're gonna have CPI. Just for the record, that is Consumer Price Index. It's an inflation indicator, and cross your fingers, it's supposed to be better. Now, we
No.
know
Wait. What's better? It's not possibly be better.
why.
How could a January inflation number be better?
Oh, actually, would you like to know? So,
Yeah.
retail sales numbers came out this morning and they were complete and total crap. So, December, which was supposed to be, and I quote, a strong shopping holiday season, was way off. So,
I saw that.
instead of being up 4/10, which is what was expected, they were flat for the month of December, month over month. They were expecting it to, oh, that was the headline. So core was down a tenth month over month. They expected to be up a half. And that number, that core retail sales number, gets plugged into GDP. So that matters. Also, just in case that wasn't enough, November was also revised lower. So even weaker. So weak consumer spending. Bonds, did you notice this morning? They're rallying. And the
Yeah.
10-year is down from, it was almost 430 last week, and now it's down around, I don't know,
416.
4.15, 4.16, something, somewhere in
Yep.
there.
No,
So,
that's good.
yeah, it
It's
is.
a good op. I would recommend locking the next day or two before that jobs report comes out or inflation number
Tomorrow.
comes out.
Jobs is tomorrow. And are
No,
you?
not the jobs, inflation. And the
Oh,
reason why, there's a great article about this yesterday in the Wall Street Journal about how the January inflation number is typically the highest of the year because while like your gas prices and your grocery prices, they change regularly. A lot of businesses reset their prices in January, like your doctors, your professional, CPAs, that kind of stuff. they will reset their fees for the next year on January. And so you typically see a little spike in January in rates, even though they try to even it out with seasonal adjustments. It's still there coming in January. So January typically is the month that has the highest inflation number.
That is a great point.
Yeah.
Also important to note, though, that last January's number was pretty high.
Hmm.
So with any luck, we'll have a lower number this year, which should help the overall numbers, which anyway. So
Yeah.
that's a great point, Kevin. But again,
Now it's not always the case. January 20 or 2024, it wasn't the highest month of the year. There was another month that exceeded it, but it was still the second highest of the year.
okay, I would say that I cringe when we start giving lock advice, but be careful. That's
Yeah.
it. And also, it could go the other way. That's the tricky part in
Yeah,
as
yeah.
we all know. I mean, it could go the other way. And while we're on the subject of rates, I mean, rates schmates. So they're not expecting them to go much lower. Although I have a couple of deals, like we all have a stack of refis right now that we are praying are going to be a certain rate, right?
Right.
And so I get it. I am the same. I want them to be a little bit lower, but let's be realistic and let's really focus on, I don't know, purchases and the things that need to happen regardless and not expect anything tremendously lower. And also, I have conversations with my clients. I remind them not to be greedy. I mean, can you imagine? And to, like if we see, oh, here we go. If you see a rate you like, lock it in. We haven't had that in a while, right?
Yeah, yeah.
So
No, I think we're close to that number though.
we
I
might
mean,
be,
we've definitely seen a little, some rates coming down a little bit, which is great. And it's really, spurred up a lot of people to, get off the fence, purchases, refis, things like that. And then HELOCs, of course, are a big opportunity out there as well.
they are. We're actually going to do a show on HELOCs coming up. I forget when, in a few weeks or so. But it is, and again, it's always an evaluation. What is your strategy? How are you going through things with your borrowers? How are you being an asset, showing them that it is a decision that needs to be made with professionals. I had a conversation with a friend the other day, very, very, very bright. And it was funny because I said, rates should not be how you choose the person you're working with. And her eyebrows went up and I said, let me explain. And I did. And by the end, she's like, I get it. Yeah, I totally get it. And then she gave me examples of exactly that, where there were situations within her family where it needed something more than what is the rate. And that is the drum we need to continuously be beating. Say that 3 times fast. So anyway, so there you go. Bonds are better today. Cross your fingers, say a prayer. Hopefully we keep going with that. Also, just wanted to quickly mention that there is a mixer on the 18th in Danville with Camp East Bay putting together a little get together, which those are fun. Like
They
when,
are.
I mean, I'm going to go
Yeah,
because there's like
blast.
35, 40 people, sometimes a little more. And you just get together with people and that you've known forever. You meet new friends, and it's just an opportunity to, I don't know, be human.
But I also find that you're able to exchange ideas, right? Best practices is key. And I think we
Yep.
miss out on that, especially since COVID, where people are not going into the offices, putting things together like, situations like this, it really helps connect people.
I find that
Yeah.
really interesting because we're seeing more and more industries go back to the office, but the mortgage industry is like, nope. The old timers want to stay at home in their pajamas. The new people don't think they need humans. And nobody is thinking about the fact that when those two cohorts come together, the newbies are learning from everybody else.
Yep.
And by the way, the old, that's us, the older group, we
Learn
are
from the
still
newbies.
learning because
Yeah.
so when you're in an environment where you're around other mortgage professionals, remember how we learned the business. It wasn't just my deals I was doing. It was the guy next door to me and the guy at the copy machine that I was talking to and all those people you heard about their deals too. And then it all comes together. It's so important. Ugh.
Isn't that why we're not seeing a lot of young individuals getting into this business? Because they don't have that training and mentorship. There's not the hands-on training
Yep.
at a location, right? An office.
Yep.
So I think
Yeah.
if they bring that back, or someone can bring back that model, well, you will get, some fresh new blood for sure.
Yeah. Well, I think there are areas in the country where I'm hearing about people being off in offices more, even in our industry. But, again, I think it's a trend that we need to embrace, and that as somebody who's seasoned, like I see some companies that are getting rid of their older AEs and they're hiring young people. I'm like, no, no. You need to team the younger ones up with an older person who's experienced. There is nothing ever that's going to replace 40 years of scenarios, right? Or ways to think
Absolutely.
about a loan that's different than there's no computer model. There's no way to have a young person know all that. So put them together so we can learn from each other and keep it going. It's good for all of us. All right.
I mean, I've seen that in the real estate community, right? You get a seasoned, and then they pass their book of business or they partner up. I mean,
Right.
that's happened a lot, so it works.
It does work. It does, doggone it. So get your ass back to the office for God's sake.
Yes.
Okay, so this is from MBS Highway. So they were noting that Alan Greenspan, remember him? He used to be the Fed chair. Everyone, I think, loved him. He had a favorite index, employment cost index. It was the overall employment cost, wages, and benefits. And it went down in Q4 from zero point 0.8 in Q3 to zero point 0.7. And it shows a deceleration in wage pressure and inflation, which is good. So back to the inflation numbers that are coming out, hopefully that will continue. And then the New York Fed survey said that consumers are saying that they're expecting less inflation in next year. But again, I'm like, okay, what do we know, right? But what is good about that is it impacts if they're thinking that things are getting better, it will help them feel better about spending, and that will help with major decisions like, am I going to buy a house? The other thing too, affordability is at a 4-year high. So that's good. I mean, we're not back to pre-COVID levels, but it's getting better and better and better. So 4-year high, do the math. That's 2022. And so that's promising. In other news, ICE Mortgage Monitor came out with their appreciation numbers for January, and we are up 0.6 in 2025. And there's a lot of refi opportunity. So make sure that if you don't have your clients ready, get them ready, because you need to have, they keep talking about this strike rate idea. So this conversation and understand with your borrowers that if you get to a certain rate, you're going to lock it in. And then again, you need to have a real understanding that don't mess around with this. Everyone's making a commitment. So how when you lock a bunch of stuff, then you pray to God the rates go up the next day so that you can get it all closed. Anyway, so there you go.
It's
Also,
a gamble.
it is also helpful is or interesting. Realtor.com came out with their listings for January, and new listings were up 41% month over month, but active listings are down 7% month over month and 10% year over year. And we're still down on active listings, 4% from 2020 numbers. So, I mean, so we don't have a ton of inventory out there, and I know it depends on the area, but that's good to know. Yeah.
Absolutely. Yeah, I think because rates are where they're at or where they were, people are locked into that 2 and 3%. What are they going to do, right? They sell, they downsize. Now they're going to get
What?
us 5 or
They're,
6%.
they're going to live their freaking lives. They're
Right.
going to figure out that you can't squeeze 4 kids into a 2-bedroom condo or an apartment. They're going to figure out they want a yard. They're going to want to move closer to their parents. They're going to want to do something. The parents are going to want to move closer to their grandkids. They're going to
Very
get
true.
divorced. They're going to die. All sorts of crap is going to happen, and they're going to live their lives, which is how we need to be making real estate decisions. That's just my opinion. Okay,
Yes.
that takes me to a situation that Kevin encountered this week, which is he has a deal that his borrowers
Oh,
are buying.
buying a real estate owned from a bank.
Yeah,
Like who does that?
I know. I was so blown away that I made a property profile. I'm like, how? Why? What happened? And
Yeah.
I don't think we have all the
It was
answers.
a reverse mortgage where the owner died,
Hmm.
and the value of the house exceeded the loan amount, or it was less than the loan amount.
Value of the house. Yeah.
Yeah.
But how does
So the heirs had no benefit in
They
taking the
just let it
property.
go. Yeah.
Yep. I have so many questions about that, but it happens. And So it's something that we could be looking for with our clients, or you could encourage your realtors to be looking for, because it happens, right?
Yeah.
It seems weird, definitely seems weird, but I'm like, Ario, what? Okay, so
Hey, real quick before you go into anything, don't forget that for California loan officers, Cal HAFA is coming out with the
oh yeah.
down payment assistance program coming out pretty shortly. You might want to start lining your potential buyers up for that.
Yeah, I haven't heard about this next round. Is it going to have the same lottery system and
Yeah, same lottery system, and it's going to happen, I believe, in March. I had one person reach out to me, but then he disappeared. I don't know what happened to him. But he was
you
referred by the last person I
guys,
did a Cal HAFA for. So,
that guy figured out what the odds of getting one of those Cal Halfa deals was,
well,
and
no, actually, what I told him was I told him, well, don't wait around for the raffle. Cal HAFA is a great product. Even if you don't win the raffle, that you should start it now. And then if you win the raffle, then hey, bonus time.
okay,
Yeah, you
Ed,
got lucky.
do you
Yeah.
see this? Ed says it's also known as how to create a disenchanted buyer. That program. So they think they're getting one thing and then it doesn't happen and they're just devastated and they give up.
Yeah.
So
Well,
we have to be therapists during that process and help
set,
them.
yeah, set the expectation. Say, look, it could be this or it could be this, and it's up to you.
Well, but also, okay, if this doesn't work out, here's what our plan B is going to be. Maybe have that in place ahead of time so
Mhm.
that they're not just banking on that. And if that doesn't happen, then they think it's all over. I mean, every person is different and everyone will respond to that kind of messaging differently, but it is definitely all about set the proper expectation, make sure that they understand there are options. This is just one of them. I mean, it's an interesting program because it's an equity share, which I find fascinating. So assuming this is like last time. So you've already really gone through the paces. If you've explained that to a borrower and they have embraced it. So that's incredible and you should be applauded for that. Now, set up plan B so they know what you're going to do if they don't get chosen. Okay?
Mhm.
And also, it was really funny because last time I was talking to Molly Ellis at Cal Halfa, and she said that they had developed a very, very strong appreciation for what brokers go through because the people who were qualifying for that program at that time, and again, for the 50th time, I don't know if it's the same this time, but they had to be first time home buyers, but they could not have had anyone in their family buy a home before also. And so they had to get all this documentation directly from borrowers. And she said that they would get
Wow.
like photos uploaded to their system of Tabasco containers in somebody's shopping cart at the grocery store. And they ask for one thing and they get another thing. And I'm like, okay, well, welcome to
Whoa, whoa, wait, you mean I'm not the only one?
Buying a Tabasco?
I know. Well, it could have been
Grocery-
worse. I could think of a lot of other things at the grocery store I don't want to see a picture of.
Yeah.
So anyway, there you go.
Wow.
Yeah. And somebody said Molly is the best. She is. We actually have on our YouTube channel, there is a show that we did with her. She's really great. If you have any questions about any of that, for sure go find that. And on that note, our friend Jason Bellevue has been all over making sure that we are up to date on our YouTube channel, which we're using again. We hadn't used it for like a year and a half.
Didn't you want to say a special message to Jason, by the way?
Pardon me?
Didn't you want to say something special to Jason?
Jason. So Jason is quite the Patriots fan. So I think he's probably in mourning right now. I felt his pain for him because, no 49er fan wants to see the Seahawks win, especially in San Francisco. So anyway,
Right.
poor Jason. Anyway,
Sorry, Jason.
thanks for the reminder, Kevin. That
You're welcome.
was very important. Um, Okay, there is a bipartisan housing reform bill, and it advanced after overwhelming House approval. So here's what I haven't quite figured out is how it's going to help the average person. So in all seriousness, if you have some insight into this bill, please let me know because I'd like you to walk me through it. It's going to do a few things, maybe. I mean, they're supposed to be streamlining federal housing programs, updating policies, and expanding financing tools, reducing barriers to construction and development. I mean, it sounds great, but I've heard these words before and there's
I've
nothing
heard them 100 times.
exactly. So I'm like, okay, how are you going to do that? And so, they're going to, anyway,
They're
You
so
have
going
to
to make
see them
housing
work.
affordable.
what?
They're going to make housing affordable.
Well, okay, how about let here, I can make this very simple. Cut back on the red tape, get rid of so much local and state interference in building and doing remodels, and kill at least some of the LLPAs. You know what I mean? It's like it's so simple, but they're doing everything but that. And by the way, they are not, I'm not bashing this administration. This has not been addressed properly. I don't know the last time that this was addressed properly. So this is across the board, in my opinion. That's
Well, we'll see. I guess we'll see.
yeah. What are you laughing about, Kevin?
I am laughing about Ed's comment about what a client sent him. 1 year of bank statements, 8 to 10 pages each, one picture at
Oh,
a time.
Kevin's pet peeve.
Ed, I feel your pain.
Yes,
I've seen it as well.
yes. So here's my suggestion. Have somebody that you work with who does all of that intake for you so you don't have to do it. And then also, if you hear from said person that it was done like this, one page at a time, or taking photos and all this crap, uh, call your clients and tell them to get it together and do it differently. Even if it requires that you meet them in person and get caught. I mean, seriously, that's better than this crap.
Yeah, I've walked them through
It's all
logging onto
digital.
their bank
Yeah.
account and saying, okay, go into your mortgage thing. Now you click over here. Let's share screens. You can show me how to click here, and I'll show you where you can get the PDF of each statement and then
You can
save
do
it to your,
that.
yeah.
I am impressed. I couldn't walk someone through there if someone had a gun to my head. So good for you.
They're all
Ed's on
basically the same
fire today.
platform.
Ed's on fire today. He says kill the Coastal Commission as one of the things that
Yeah,
would help our
love that. I
yeah, well,
try.
Kevin and I have both testified in front of the Coastal Commission to try to make it so they weren't redlining down the coast of California and letting everything to the right of Highway 101 fall into the ocean, or Highway 1, and rot away. And so yeah, it is, yeah, that's no joke. Okay, so we promised we were going to talk about non-QM today. And why are we continuously talking about non-QM? Because it has become such a major part of our business. Kevin and I have been doing a lot of non-QM in the last few years. We do a lot of private money and things that are outside of the box. And our clients are open to this if we understand it and are able to explain it to them so they understand why this makes sense now and later and how it fits into what they want to accomplish. So again, as somebody who has reps who have known me for decades, who could attest to the fact that I used to be the A paper girl, and they would try
Mhm.
and talk to me about something like that, and I'm like, nope. So I have really come a long way, and so can you. And I suggest you do it now. So we're going to keep talking about this because it is really, really important. And different lenders have different takes on non-QM and different things that they do. But I believe, Kevin, if you remember this, I think there is something like a 35 to 45% exception rate in the industry. So we have guidelines and then we have lenders who will make exceptions outside of those guidelines should the loan make sense. So we like to talk about those here because it's just, and again, this is not subprime. I mean, my borrowers who are doing
Mhm.
non-QM are really
No.
good, great borrowers with lots of equity and good scores. Typically, it's something along the lines of the income is not traditional Fannie Freddie in the box income. It's
Mhm.
not usually, I'm not usually asking for things that are, these are not funky. Well, they're funky, but you know what I mean? So, George, why
It
don't you
makes
tell
sense.
a little bit about ARC Home, not to be confused with what I put on the
Yep.
screen, which is wrong, and um, give us a little overview of ARC.
So our home, and again, thanks for having me on here. And I don't know why someone would not be doing non-QM. I mean, it's a very viable product for their clientele.
Right.
There's a lot of, customers out there that have the ability to repay, right? So that's the important thing. That's why it's not subprime, it's ATR. So we want to make sure that they have the ability, whether it's by qualifying the income, whether it's having enough reserves, whether the property is cash flowing. That is the key. We're not looking to put someone in a bad loan, right? And we want to make sure that, like you're saying, you set that right expectation for that client by saying, look, there's options out there. And so with ARC, that's what we do. And as AEs, our goal is to provide options to you and your client. So when you present a file to us, it may not end up being in that way, right? We might come back and say, well, let's try this, or it doesn't work because of that. So as a lender, we do all lending, conventional, govy, non-QM, but we definitely excel on the non-QM side. And so from a full doc non-QM product that doesn't meet Fannie Freddie, it might be a jumbo product, might have some, previous derog interest. Maybe they want interest only. Or we have the alt doc that has bank statements, 1099, profit and loss, things of that nature. Or you have the DSCR, right? That you're going to cash flow on an investment property. And
Yep.
then we also have the asset utilization program on the alt doc. So the nice thing is, on the income products, we're able to mix and match. And that's kind of what I was mentioning to you. We've had situations where we've done loans for clients where they didn't meet Fannie Freddie for whatever reason, right? Their debt to income ratio was too high, or the documentation just didn't meet what they're looking for. So I've had, situations where it was a purchase transaction and we had to mix and match the income, right? So I had a couple, I was buying their first home. Um, he was in tech, so he was a wage earner. He also had RSU. So we had to add the RSU to that. The wife was a part-time, she worked for a Montessori school. And then they also had, he being in tech for many years, he had a stock portfolio. So we were able to turn that into income with asset utilization. So at the end of the day, they qualified, we got them in their home. We've since then, the broker brought them back, refinanced them, qualified the same way, lowered his rate, right? Because rates have come down in the last couple of years in certain buckets. So they were very happy. They also were able to buy an investment property the same way. So the broker's been able to help that client, on multiple occasions, qualify.
That is a great example. Another word for that income, having multiple sources of income is layering. And
Yep.
not all non-QM lenders do that. So it's a really important question to be asking when you are shopping your loans to make sure that the
Now, I always find that interesting that some lenders won't combine different sources of income. Like, well, yeah, they have a job and they have, $1 million in the bank and they have this rent flow. Like, why can't we just combine all these together? It doesn't make sense. But yeah, you run
Right.
into that once in a while.
Well, every investor out there has their own set of guidelines, right? And what they
Yep.
follow,
Oh,
and
yeah.
the risk, if you want to call it, that they'll take. And so
Yep.
and by setting that expectation for the client, again, they're not going to get the conventional rate. But they've really narrowed down. I mean, you're seeing rates get really close to the conventional rates right
Conforming.
now. Yeah.
Absolutely.
yeah,
Sometimes it's actually better. Uh,
yes,
Yep.
yeah.
maybe if you because you throw a year prepay on there, sometimes that's what kicks it
Correct. Yeah.
up.
And
But
on an
but
investment
honestly,
property. Mhm.
whenever I do a non-owner non-QM loan, I always go for the 1 year prepay because they're not refinancing the first year most likely, so
Right.
why not? And they save that much more money on the upfront. So it's
Yeah, that's a great option. I mean, I think a lot of times, and sometimes there's a big difference from a zero prepay to a 1 year. So it really, really
Yep.
makes sense because
Yeah.
then it allows them to, maybe the property may appreciate in that year, right? Rates come
Yep.
down possibly, and therefore you have that ability to put them in a better position, or maybe they want to pull some cash out and buy another investment property, right? So
Yep.
there's those different options.
Yep.
There are. And again, it's important to have those conversations with your clients up front.
Mhm.
I've said it before, I always run non-QM versus Fannie Freddie if I'm doing a non-owner investment property. I guess that's redundant, but because there are times often where it's better to do non-QM for a myriad of reasons. But again, you want to talk about those prepay
Well, the two main reasons.
pardon me?
The underwriting is much easier, much faster close, and sometimes the rate is the same or even better.
But also you have to make sure, because this also comes out in these conversations, you want to make sure that they don't have some future plan to move into the property if you are doing
Hmm.
non-QM,
Yep.
Correct.
because that is a no-go.
Now,
And
actually, I mean, I'm going to take a thing on this, but I have a problem with that because if you buy a Fannie Freddie loan and you do it investment property, there's no requirement that you never move into that property ever again.
But they're
And
qualifying you using overall income, and this is
oh,
just,
I understand that.
I know you understand,
Um,
but that's their reasoning.
right.
Right. So if
But
it,
what if situations change and now they've got a really great job and they want to move into that property and they can qualify for it? You
then you got
know,
to refinance them.
Yep. I mean, it's just
Right.
one of the trade-offs, and I think
Yeah.
that because this program is so valuable, it's fine. Like, I'm not going to argue that point with these guys when
yeah.
they're doing these loans because, frankly, I will never get over the trauma of trying to squeeze my investment clients into a GSE loan, and it is just brutal. So the way that everyone does their Schedule E's is not necessarily helpful
Right.
when you go to qualify for a loan. And so not having to go through that brain damage is just liberating, beyond liberating. So, I mean, I'm grateful for it. I just want to make a note because the other thing what that was mentioned is RSU income. And let's just put it this way. A paper lenders do not calculate RSU income the same. There is
Right.
a vast
Oh,
variance.
yeah.
Kevin is so clear on this. I mean, Kevin, tell them what you've gone through.
Oh, no, I had one. It was like very straightforward. They had RSU income. And then the underwriter came back. And basically, what it was happening was the amount of stocks they were getting was reducing every year. But that was because the price of the stock was rising.
Correct.
So
Right.
they were getting about the same amount each year. And the lender came back to no, it's declining, and therefore we can't give you any RSU income. Now, he was getting minimum of $110,000 a year in RSU income, minimum, and they wouldn't count any. But I just flipped it to a different lender that totally looked at it. I was surprised they actually were really aggressive on how they calculated the income. And okay,
Yeah, well, you'll find that with ARC, we definitely calculate it more aggressively than the normal,
hmm
agency conventional lender. Uh,
yeah,
we'll follow the Freddie Mac guidelines, but it does the income calculation wise, it's more aggressive, and so we've been
yeah.
able to do a lot more with that. So
Now, is that RSU income? Is that more something that's happening in the Bay Area? And
probably I've probably seen that. I mean, I have seen it in other markets, but yeah, probably more so in the Bay Area because you have more of tech here. So yeah,
yes,
I've seen a lot of it in Silicon Valley and the Alameda County areas.
I've never seen it outside of this area, but I mean, I am in this area. I do loans in other places though. So, but you as a rep, you would see things all over
Yeah,
the place. So you would know
yeah,
better than.
yeah, definitely a lot more here. So the other thing I wanted to mention was, especially talking about the alternative doc, the consumer, the self-employed borrowers, yeah, the way they handle their taxes, and that's why they're kind of led to or forced to do a bank statement loan. Unfortunately, they're never really taught that a certain way that, look, if you do it this way, you're going to have a harder time getting a mortgage loan, right?
uh-huh,
So I think from an origination standpoint for yourselves, a lot of times you're guiding them and saying, look, right now your financials are a mess. I know you're looking to buy a house. Let's help you change it around. That way it makes it easier to qualify for that mortgage loan.
yeah,
So, and I deal with this on a daily basis with underwriters where I have to remind the underwriter, look, they weren't taught how to do this. This is just
right,
the way it is. So let's put our hands around it, our head around it, and say, does it make sense?
yep,
Okay. And went back to the RSU thing about the, stock value going up and the number of units going down, common sense, right? So
yep.
that's
You know,
that's it's
there's
important.
another one that's very common sense one that used to be just a dead stop. And that was if you had someone who's a professional, let's say an attorney, and was doing really well and then became partner. And that used to be a dead stop. I remember having an attorney who was a good friend. Hey, I made partner. I want to go buy a house. And I'm just like, oh, that's gonna be a problem
Yeah, wagers
because
are self-employed.
you went from wage to now you're self-employed and you don't
Yep.
have a year's self-employment under your belt. And ideally you want 2 years. And now that we have options for those.
Right.
So that's one of the good things. We can use non-QM for those.
I had one of those for a financial advisor who went from he was self-employed working for a major firm, but had a 1099, but then became a partner and then was W-2'd, but then trying to go back and, convince everyone to use the bonus, the commission, all that stuff he was getting before anyway was so stupid. It was just so stupid. So,
Definitely a challenge for
I
sure.
just want to mention too how important it is to have somebody like George who knows the business. You can call him or an experienced rep and you can ask them questions and they're not going to talk out of their tail. They're going to, if they don't know the answer or they think it should be double checked, they're going to double check
Yep.
and they're going to help guide you or give you different ideas that are outside of the box. And I just want to, going back just briefly to the reverse mortgage, REO conversation. Lynn Jackson, who is an amazing rep who we all know and love, he's been in the business forever. She made the comment that heirs can buy a home that was a reverse mortgage for 95% of the value.
Yep,
So it is an option, but not all families. First of all, they
do
don't know.
that.
They not only
Right.
do they not do it, they don't even know that's an option. So it's here again, this is you being an asset to your people and letting them know that they have other ways that they can approach that if somebody wanted the house. And again, they can get it for under market. That's a beautiful thing. So thank you to Lynn for that. And remember to call George or an experienced
Mhm.
AE for guidance on these things. I mean,
Yep.
this is I know they're trying to make this so that you can do everything with AI and all these scenarios. You can just put them into a computer system. That is a guide. That is a beginning. That is a launch pad for you, but it is not the end. You've got to call around. You got to know your reps and you have to double check those guidelines, et cetera. Otherwise, you run into trouble once you submit it. So, and again, this requires reps need to be in touch with us, right? But we need to respond to their phone calls. I don't read emails much if I can help it, but I will get on the phone for sure. And I do go to events. We have got to be at events. And then you want to support the reps who are supporting the industry and they're sponsoring things, et cetera. So get out of your house. I mean, George, next month,
Yep.
March will be 6 years. Kevin and I have been doing this show for 51 weeks a year. And from the very beginning, because we were in lockdown, I would tell people, you have got to get up in the morning, take a shower, put on some clothes that don't stretch, and get out of the house and go meet people. Like you
Yep.
to do it. Even, I mean,
That's
back
important.
then, even if you were standing outside 20 feet apart from each other, yelling through a microphone, whatever, just you've got to be, it's a human, that human interaction is so critically important. So, okay. So income stacking or layering, that is a
Yep.
really, really important way to go for these non-QM loans. Give us some loans, not loans. Give us some other ideas of loans you've closed recently that are
So similar to that, and some lenders also, some do, some don't, where you're still stacking, right? You have a husband or a wife, a spouse that is self-employed. So you're using bank statements for that individual, and then the partner or spouse is a wage earner. So some investors allow that, some don't. ARC does. So we do have the ability to again to mix and match and to stack it, right?
Nice.
So that we've done all the time. So that's an easy one. Um, Another recent example that I just closed a purchase transaction on was it was a bank statement loan the way that it came in. So with us, and going back to what you were mentioning, when you come to us or you come to me, you come to the AEs, give us the full story. Tell us what's going on. Don't hold anything back because we want to be able to guide you. And to me, I'm a problem solver. I want to give you
Yeah,
options. I want to say, yes, I can work. No, I can work. I don't gain anything by giving you wrong information or lying
yep,
to you, or I don't get paid on an application. I
yep,
always say we don't get paid for practice. We get paid for closing loans. So give us all the information. If it's coming from another lender, tell us what's happened, right?
yeah.
What was the issue? So that
I
way
always
we're
start
on.
out with the bad part. Okay, I got this
Correct.
deal.
Yep.
Here's the issue,
Hmm.
you know. It's so funny because then I'll get some reps and they'll ask, well, I would have told you that up front if that was, an issue. Of course,
Right.
everything else I'd have left off is the good stuff. But
Right.
I know there's a lot of loan officers will start off with the good stuff. You
Right.
pitch the thing, and oh yeah, now I've hooked them. Oh, now let's drop the fact that there's some issue with the property or something like that. So yeah, I had a realtor do that to me this week. I was sharing it with Audrey, where this realtor calls me up. I've known him for a few years. He used to be a loan officer, and now he's just doing real estate. And he pitches me with this deal. And he goes, "You do a bridge loan." And for someone who has a house and wants to buy another house, I'm like, yeah, we can do that all day long. As long as the numbers work, it's super simple. And he starts talking about the new house he wants to buy. And I'm like, okay, great, great, great. And then where's the other house? And what's the status of his other house? And then finally, he like dodges the answer. Finally, I get the answer, and the property's in Iran. And I'm like, stop. Property's in Iran. Like, it's a sanctioned country. We can't get money from Iran legally. I know it can be done illegally, but the FBI gets involved. And I don't want the FBI knocking on my door, nor do I think you want the FBI knocking on your door. And, oh, it's not a big deal, he says. I'm like, oh, yes, it is. I have heard their interviews from another loan officer, and it's a scary proposition. They know so much about you that what they knew about the other loan officer when it happened. I was in the other room listening in on the conversation. It was scary. They knew everything.
You made sure it wasn't Iran, Indiana before you killed it, right?
Yeah, I was dead. It was definitely
Oh
not.
my God.
And then to top it off, he goes, "Oh yeah, we can do it, but can you give me a referral fee?" And I'm just sitting there like, referrals are against the law. They go, "Oh no, I had another guy tell me that if you do it for $5.99, it's legal." I'm like, it's not legal if it's $20.
That's where you slap the shit out of them, hang up the phone, and block them. I mean,
Right.
that is I mean, the Iran thing, maybe he didn't know. All right, that's
Right.
fine. I mean, that's
Well,
fine. But the can I have a referral fee? Get out of here. Come on. So,
and that's as an originator, I mean, it's important to really know the loan and the client because so I have a loan right now where it came in as a bank statement loan. We did the qualification, it came in. The name on the bank statement, the business name was different than the name of their business.
Oh,
And then they were still invoicing under the one that matches the bank statement. They said, "Oh, that was an old business. We just never got around to changing it." So wait a minute, we qualified you on. So again, it's very important to ask the questions, question everything, um, and give it to me up front so that way I know how do we structure. So in this case, we canceled the file, and then we turned it into a P&L loan.
ah,
So we did a P&L with no bank statements. And
okay.
so that's where we're kind
That's a
of,
nice solution. That's
yeah,
thinking outside the
yeah,
box.
talk about
yeah.
paying for no
Yeah, I
bank.
had, I've run into this one recently, where you cannot close your loans in a name that's not on your ID. So you can subtract from the name that's on your ID, but you cannot add to the name that's on your ID.
Hmm.
So, like just say George Ramirez, you could not, if that's what shows on your driver's license, George Ramirez, you couldn't say, I want to close it as George Allen Ramirez. If the Allen doesn't appear anywhere, you can't suddenly add it to title.
Hmm.
And I've talking to Notary about how like people try to do it all the time. It's like, no, you can't. You can reduce, but you can never expand.
Right.
You can't add a senior if it's not showing up on your ID, or you can drop the senior if it's on your ID, but it's the other way around. So it's quite interesting that people get all bent out of shape on that stuff too.
So
Right.
you're saying
Right.
that just because my dad used to call me Audrey Jean Bossa Bean, I can't
Yeah,
use Bossa Bean instead of Boysono?
yeah, it's kind of hard. Yeah,
So picky these days. So
really
picky.
funny.
Okay,
Yeah.
I love what Ed said. He goes, non-QM is the best loan. Wait, non-QM when the best loan is the one you can qualify for. Because I hear this from loan officers too, and I used to say the same thing. So I understand, but stop it. Because somebody's like, I have clients who will say, well, but I was hoping for this rate. I'm like, well, you might have been hoping for it. It doesn't exist, and you don't qualify for that.
Right.
We have to be willing to just look them straight in the eye and let them know, okay, they need to, hopefully they have that feeling with you and they understand that you are doing absolutely everything that is possible to make things good for them. Starting there, right? That's your jumping off point. But then from there, they have to trust that when you are telling them, this is what you qualify for, you don't qualify for that. And I have a loan right now with somebody who we're in the very end part of it, but the beginning, I mean, this guy was A paper his whole life, but he was also W-2 his whole life. Well, now he's not.
Hmm.
And so why can't I have that rate? Why can't I have that loan? What do you mean? So it's been a lot of work on my part. And I he was the Google guy. Like he would no, not Google, Chat GPT. He was Chat GPTing the crap out of everything. It was driving me crazy because he would come to me with these stupid scenarios. And I finally looked at him because he's in the medical profession. And I said, you know that story you told me? I think I've told this story. That story that you've told me about the patients who go into the emergency room or the doctor, and the doctor runs all these tests, and then they tell them what's wrong with them, and then the patient argues with them because ChatGPT told them that this was the problem, not that. Okay, I
Same
said,
thing.
you're doing that to me. And you should see the look on his face. I said, you must stop. You have to stop because it is brain damage for you. You are miserable because you're trying to come up with all these alternate situations or solutions, and those aren't going to work. And all the way down to when the appraiser went out to do his appraisal, he pointed out that the oven wasn't working because he thought that would, make a difference in the price. No, it just meant that he spent the weekend finding an oven, installing it, making sure it works so the appraiser could go out again to make sure. I mean, I'm like, talk to me. You have to talk to me. They think they're smarter than you. And I'm like, because what has been happening? Okay, mortgage, it's a commodity, right? It's just a rate. That's all it is. Why do we even need you? They don't understand the million different details that go into it. So we have to have those conversations and we have to re-educate people so they understand how complicated this is and that they do need to have somebody who knows what the heck they're doing involved, right? So,
Well, and it's the same thing with us, as far as lenders, eight kind of executives, we need to be able to build that rapport with you, the originator, right? And we need to know what we're talking about. And if, like you said, if we don't, we find out. But
yep,
be honest and clear so they can build that rapport so that we have that trust. Because just like you, if you don't have that trust with your client, they're going to be second guessing you, calling ChatGPT, doing everything they can to second guess it. And
Yeah.
unfortunately, there might be a time where somebody calls up and says, "Hey, I can do that loan for you," agency, and they really can't, and that's, more problems.
well,
Yeah.
I mean, we hear about this all the time where someone's pre-approved or pre-qualified and
Right.
they go into contract and then find out they don't actually have a loan. So
Hmm.
all lenders are not created equal. All appraisal departments are not created equal.
Correct.
And
Correct.
as a group of people that were raised being told, don't brag, don't tell people what you're doing, keep it all to yourself, just be modest. Okay, we've had to learn how to actually talk about what our value is because if we don't, then they do just think they can just go to a computer,
Anyone.
Right.
a
Yeah.
GPT. So Tina says I had this happen to me with a new buyer and I copy and pasted his questions into Chat GPT and responded, of course, after reviewing and minor changes. So we're all we're all doing things, like trying to adapt to what is being thrown at us, but also making sure we stay true to the basics, which is we need to walk people through this and help them understand each and every step of the way. And yeah, so there you go. All right. What else you got? So
So,
air
yeah,
air DNA. Talk to
yes.
term rentals.
Oh, yeah, that's a good one.
So, yeah, back to what Kevin was mentioning in regards to investment properties and why it's sometimes better to do a DSCR, right? A debt service coverage ratio loan. Because you're getting 100% of the rent, right? There's no haircut as you would on a conventional file or an income doc file. Air DNA is when you want to do a short-term rental property, right?
Mhm.
And that's been rampant the last several years, right? Everyone wants to buy an investment property, put it on Airbnb, do a VRBO and make more money. And some people are doing very, very well at it, right?
Yep.
So the important thing to know is, it must be in that market. It must be in a short-term rental market, and be also very careful with city, county, permit requirements,
Absolutely. Yep.
right? So that's something that the underwriters are looking for to make sure that it fits. But with ARC, we do go up to an 80% LTV on a DSCR, and we don't reduce the LTV when doing short-term rents. So that's the nice thing. I know other lenders may reduce it by 5%. And we also don't have a rate ad, for short-term rents. So a lot of times brokers, originators will just reach out to me and I'll run the Air DNA for them and say, look, this is where it's at. Does it work? right? We're looking for occupancy percentage of at least 50%, and then, whatever the annual rent's going to be versus what the DSCR or what the PITI is going to be, right? So that's
Yeah,
a
no,
big,
it's good. I know guys that do a lot of Airbnb, and it's a really good source to get them a loan because they
yeah.
realize that the property is generating this kind of income. The price of the property should reflect that income.
Right. The other thing that you're seeing is appraisers a lot of times are not doing a short-term rental 1007. So what I always recommend is if we're using the AirDNA, order the 1007 as long-term, so there's no conflicting information, and we're going to use the AirDNA.
Yeah. Yeah,
So,
but also what you're saying about the counties and stuff is really important. It's counties and cities because a lot of them you want to watch what the rules and regulations are currently, but is there anything coming also? Um, because if you're buying an Airbnb and you find out that your city's about to outlaw Airbnbs or heavily restrict them,
Right.
um, you know, my
so
own city they're really restricting them, but I keep it going. I keep getting the licensing, and that it's
Mhm.
they're charging now per stay, and it's like they're tightening the noose around my neck, but it still makes more sense. Keep doing it.
Well, and to that point, so Kevin has run a really successful Airbnb out of his home. He has a separate unit. And I think it was in your guidelines, I read that ADU rental income is allowed on a one unit primary residence now, or is that right, George?
I'm sorry, say it one more time. So
That you
the
can use ADU rental income on a
yes.
primary as long as it's
Yep.
one unit. Yep.
As long as it's permitted. Yeah, it has to be permitted.
Yep.
Yeah.
And to that point, Deborah noted that many condo associations don't allow short-term
Yep.
rentals. And I would know this because my mother bought a condo a number of years ago in Las Vegas and paid cash for it and then found out that she couldn't Airbnb it. And it sat there for years and years and years. Like, I mean, like when you go to Vegas, I don't want to stay in a condo, right? You got to stay where you're going to be doing things.
Yeah, you're gonna gamble.
Anyway, good grief. So those kinds of make sure we're double checking all of that, right?
Correct.
Yeah.
Correct.
So
So,
yeah,
yeah, I mean, it's a great product to use. There is less paperwork involved. You don't need tax returns. I don't need to, if it's someone that has 20, real estate, owned, we don't need to see the lease agreements or qualify those properties, things like that. We're also seeing that a lot of, professional investors will have an LLC, or maybe they'll have an LLC per property. And so sometimes the loans might be made to an LLC. And so we're not asking about those. We're only asking about their primary, the ones that show up on their credit.
Nice.
So,
all of them that show on their credit though.
yeah.
Okay, so talk about when an investment property is vacant.
So we also allow vacant properties or properties that have been recently listed. So that happens a lot, right? People go in, they buy these properties, maybe they do a little rehab and thinking they're going to turn them. And something changes or they sit on the market for a while. We are able to do, a cash out refinance on that property. We'll do the 1007. We'll go off the 1007 for market rent because it's vacant, right? And so all we're going to ask for is a letter of explanation stating, hey, it's vacant because we remodeled it. We wanted to sell it. We decided that we can cash flow it. And so now we're actively looking for renters and we'll qualify it. Most of the time we'll have to drop the LTV 5% for maximum, but it's a lot of times it still gives them what they're looking for.
Rick
Now, I
had a
know
pointer
I've heard
here.
of some lenders. Go on, Audrey.
Oh, I was just going to say that Rick had a really great point here about figuring out what your city's requirements are going to be on an Airbnb. He says that you read the city council meeting minutes. I mean, I always tell people to read them on their HOA when they're buying a condo, read them for the last 12 months. So now we get to read the city council meetings to see what they're up to, which I think it's a great idea. I hadn't thought of that. So thanks, Rick. Okay, Kevin, sorry. Go
Now,
ahead.
I was going to say that I don't know about you guys, but I know of a non-QM lender that will accept market rent on a condo, or I mean, on a property and doing a DSCR when the property is under rent control. And I don't understand that because they're not going to be able to get that rent. It's under rent control.
Yeah, I don't know.
So that now you're putting somebody into a position where how are they going to be able to afford the mortgage payment because the property isn't going to generate Do you guys do that or?
We don't.
No.
No.
Okay, yeah.
Yeah. If it's a refinance and it's currently rented, we're looking at the lease agreement and we're
Right.
still and we're still running the 1007,
Right.
right?
Yeah.
So yeah, if the lease
If
agreement's
it's
less, yeah, then we're going off the lease. Sorry.
right. And if it's low, but there's no rent control, you can say, well, yeah, then we can go to market. But if there's rent control, you can't just go to market. So
Right. Right. Yeah, we can do it in reverse if we have a lease, say that comes in at 3,000 a month and we can document it, but the 1007 is a little less, we'll allow the current lease.
yeah.
I may or may not know of a situation where somebody was getting a really great deal on an investment property because one of the units was occupied by a woman who had rent controlled rents that were way below market, but she was really old and they were just doing some math on whether or not getting it for way under market was a better deal because she wouldn't be there forever. Oh God,
Mhm.
can you imagine?
Wow. Yeah.
I said, we cannot even be having this conversation. This cannot be.
Hey,
Thanks,
we're
Rick.
coming near the end here, and I wanted to throw in a tip for something you might want to reach out to their current homeowners. There's a scam going on where around property tax paying season, I imagine it's probably going for income tax season too, where people are stealing the mail out of the mailboxes. I have a feeling it's some in the postal system because you can't break into a mailbox. It's very difficult. But anyhow, at least as far as
Oh,
I,
locked, Kevin. They're
not that I know how to break into a mailbox
not
today, but
all locked.
it's not hard to steal a mailman's key is what I think happens a lot of times. And that's how they're getting into the mailboxes. Um, and people are stealing the letters for the property taxes, and I bet they're going to do it for the income taxes too. And then they are altering the checks to make it payable to themselves, and they're depositing it. And the
Mm.
problem is that you, the homeowner, you send your check to the county to pay your property tax, and you see on your statement that it cleared, and you're thinking, I'm good, I've paid my property tax. And then you find out later that the property county is filing a thing against you, and so your only protection is that you need to go into your bank statements once they and review the checks that have cleared and make sure that they were to who you paid them to.
That is a
Crazy.
crazy, crazy scenario.
Yeah,
And
because the banks won't reimburse you
I
otherwise.
would,
You have 30 days.
wow. I would be arguing, why are you sending a check except for on your property taxes? If you do it online with a credit card, they charge you a big fee to
Yeah.
pay for credit card fees. So it really is an untenable, yeah, it's really crap,
It might
actually.
be a good, yeah, it might be a good idea just to impound.
Yeah,
Yeah.
exactly. Oh, Ed said, okay, these guys are on fire today. Ed says e-check is free. Good
Yeah,
point.
e-check is free with property tax.
And then Rick said he had a follow-up on his read the city council meeting minutes. He said he puts them into Chat GPT to summarize the minutes to save times because he's tracking multiple cities. I'm like, God, good for you. That's a great suggestion. Holy moly. Okay, well, that was quick. We are at the top of the hour. I just want to leave you with a reminder. 2/3 of all wealth in the US comes from home equity, and that home equity, we've had a positive return for 78 out of the last 83 years. So it is a long-term investment that pays off over time. And so what we need to focus on, I'm going to keep saying this all the time to remind everyone, who can we help today, and track your progress. Don't worry about like, oh, have I achieved every goal? Once you get to the goal, you're kind of over it and you have to find a new goal anyway. How's your progress? And who can we help today? So, George, thank you so much for giving us so many ideas of different
Thank
ways to
you.
help people,
Appreciate
and I really appreciate it. And if you'd like George's contact information, reach out and we'll make sure we connect you. And did you see that I did this? I changed it to our home in the middle
I
of.
saw. Thank you so
I
much.
know. Listen, I've got to tell you how impressed I am with myself because I am so technologically not always adept, and I've had trouble multitasking while on Zoom. So
And you did it while you were speaking. That was even more impressive.
Yeah,
while George was speaking, if I'm really being honest. So anyway,
impressive.
so somebody said go non-QM, love these products. AI is a great summarizer. but must verify before trusting. Thanks so much, George. So thank you, everyone. Have a great week. Go get a loan. Close a few. Got it? Okay. Bye, guys.
Thank you.